some of the other setup options as we go through, the account sets, as I mentioned, this is the integration into the GL, so the finders are actually pointing at the GL chart of accounts. So this just confirms that we're validating every entry against the GL control account. There is a work in progress account, so if you are going to track the construction of an asset, rather than posting the transaction to an asset control account, you can set up the entry to the work in progress or assets under construction account. And then at some point later on, you'll be able to transfer out of the work in progress to the asset account and define when you want that depreciation to start. The other thing, of course, is your accumulated depreciation. So as we're recording depreciation expense, we'll automatically update the accumulated depreciation and thereby update your net book values. If you do have transactions in currencies other than Canadian dollars, as I was saying, the multi-currency option will not only do the conversion from U.S. to Canadian Canadian functional currency, but it will also calculate the realized and unrealized gain or loss on exchange. The categories are really a subset of the account sets. So what we're trying to accomplish here is the ability to have summarized information roll up to the GL, but have more detailed information within the fixed asset subledger. So while you might have defined an account set as a building, within categories you could actually define multiple types of buildings and then roll up those categories to the default account set, and then that account set will then post information up to the asset control account in the GL. So it gives you the ability to have that additional detail about specific assets within the subledger where it belongs without having to move that detail up to the GL. The group codes are simply a user-defined code with a description that gives you another way to track and report on your assets within asset management. This is typically done more for management reporting purposes, whereas the account sets and the categories are used for statutory reporting purposes. The location code is another sort and selection criteria for the assets, which typically is used to track the physical location of the asset. In this case, you can add the address or maybe the floor that the asset is within the building. And then the attachment is available here, so if you want to have a picture or some information about that asset, and that can be a bitmap, JPEG, PDF, or doc file. You'll also see that there are attachments allowed within the asset register, and we'll get to that in just a few minutes. If you do use particular GL segments, then you can define cost center or profit center reporting within fixed assets as well by using the GL segment override. And then identifying a particular code would allow you to run a report by division and determine the cost and quantity of fixed assets within that division. So if you do profit center or cost center reporting, the location code can help you with that. Now, locations, of course, are different from cost centers. Cost centers are the income statement side of your fixed asset transactions. So in this case, we're tracking the depreciation or amortization expense by a cost center or a department. And this can be tied directly into the GL chart of accounts, again, just like the balance sheet entries. And we also have the ability on the expense side to allocate on a percentage basis across multiple departments or across centers. So you could allocate the expense of one asset across multiple departments. Now, given that we're so tightly integrated with ACPAC, we have a number of ways that we can record the acquisition of an asset. In your case, you would either create an AP invoice from fixed assets or convert an AP invoice line into fixed assets. You could also create an AP payment batch off of an entry in fixed assets, which is not typical, but it's there just in case. Or you can populate the GL for assets that you already have, but you want to record them as part of the norming asset management system. So for all your existing assets, you can just update the GL control accounts. Your depreciation methods are all user-defined and formula-driven. So the thing to remember here is simply that if you can define an algebraic formula for how you're calculating depreciation expense, then you can set that up in the system and run a test to make sure that it's calculating the numbers exactly the way you're generating them now in a spreadsheet. We have a number of different samples or examples of how you can use the depreciation methods. A lot of people use the straight line method because it's fairly straightforward. But even in the case of the straight line method, you may be using a different cost basis for the straight line calculation. For example, in some companies, they use the beginning month balance, others use the end of month balance, or in other cases, maybe a mid-month average of the cost of assets being depreciated. So you'll have the ability to modify the formula because you have access to all of the fields of information within the system, and you'll be able to embed any of those fields as part of the formula to calculate your depreciation. And again, we're doing this on a book basis, on a tax basis if you choose to, but there's also something that we call capacity. So this allows you to depreciate the assets based on its actual consumption or usage. And you can define what that unit of measure is. For instance, in the case of an aircraft engine, it would be the number of flying hours. So you could depreciate the asset based on how many hours it's actually been in flight, rather than just over a time period where it may or may not have been used. And that capacity production is something that you can define as well within the asset register and then update through a periodic process called production batch. So just so you're aware, there's some flexibility within the fixed asset depreciation methods. And then tax pooling is there if you're going to use CCA classes. Depreciation periods just tell you how often you're going to be running depreciation in the fiscal calendar. And then the classifications are the CCA classes. And if you are going to be budgeting, you can set up capital budgets in the system. And if you assign the budget code to an asset, we will keep track of the actual expenditures against budget and show you a variance. There's also a detailed report that I'll show you in a few minutes that details all the acquisitions against that budget. Now, given that you've got all of this different setup information, excuse me, what we try to do is streamline data entry so that as you've defined your different types of assets, you can also predefine all the setup options. So that means cost center, category, location, group, and even your book and tax method, rate, and life for depreciation can all be predefined so that when you run an acquisition entry, you don't have to visit all of these fields. You can certainly override them if you want to make adjustments to the information, but you don't have to visit those fields because we can default all this information in. So literally all you need to do is enter the description of the asset and the cost of the asset, and you're done. And if you look at the asset register, because this is the subledger that we're populating when we acquire these assets, all of this information is tracked and recorded against the asset here, as well as an update, of course, on the net book values. So as we run depreciation against existing assets, we'll be updating the accumulated depreciation to show you an up-to-date net book value. So there's also an inquiry feature. Sorry, let me go back into the register and just highlight a couple other points here. The production batch that we talked about, this is where we would keep track of the usage of the asset. So even if you're not using it for depreciation purposes, you can still get an idea of the useful life of the asset and how much it's being consumed based on this production schedule. There's a miscellaneous page where we keep track of insured values. You can also keep track of individual employees who are responsible for maintaining or managing the asset. You can keep information about the insurance carrier. There's also different dollar value fields here, depending on how you calculate depreciation, and any other additional information you feel is relevant. I talked about the fact that we support optional fields, so if you've got that module within ACPAC, you can store additional information against your assets. The additional attachments are stored here in the register, so if you want to attach a PDF document or something like that, you can store that. Now note that this is storing a reference to a folder somewhere on your network. It's not storing these PDFs in the ACPAC tables. And one of the reasons we do that is because if you want to reference the same document for multiple assets, you don't have to replicate that PDF in the database. You can simply have it sitting in one folder and reference the same folder from multiple assets. It also means that we're not increasing the size of your ACPAC database exponentially as you start adding in image files or PDFs to the database. But it's fair for most people to scan invoice copies or lease contracts if it was a leased asset, or brokerage and duty information for things that are being bought and transported across the border. And then when you want to see the attachment, you just hit the view button and you can see the document, whatever that is, whether it's accounting transaction documents or image files. If you use the asset tracking, you can store barcode information and serial numbers by location, by quantity, and then you would use the handheld scanner to keep track of the movement of those assets. All this information can be imported in off of a spreadsheet. So for populating the database, at least initially, you can use various formats. Most common people use a CSV file or an Excel file format, and that allows you to update the information into the register fairly easily. And there's a template feature that we would typically build, and then you structure the data in the spreadsheet or the database to be populated through the import. Now there is something here called component, which is referring to our master asset capability. A master asset is the ability to link, if you will, multiple assets to one master asset. So each of these components are still separate assets for accounting purposes, which means they can have their own unique depreciation method, rate, and life. But it just simply groups them either for reporting or tracking purposes, that they're part of the same project or some other means of keeping those assets related. Now that's different from what we call a merged asset. Norming also has the ability to physically combine multiple assets into one new asset. And in this case, all of the assets that are merged would just have one depreciation method, rate, and life. Okay, so with master assets, you can create a relationship, but each of the components is unique for accounting purposes with its own depreciation method, rate, and life. Whereas with a merged asset, you're physically combining them together with just one depreciation method, rate, and life. The opposite of a merge is a split, where I can take an existing asset and say I want to split it into 3 assets. So I would pick that asset, and then it would break it up into 3 assets. And then each of these individual assets could have its own unique depreciation method, rate, and life. There's also adjustment entries. So you can adjust at any point in time, and I'll just show you the bulk adjustment. You can do this individually or by range of assets. And you can change an asset category, cost center, location, account set. You can modify the capacity if you are tracking that. You can also change the method, rate, and life for depreciation purposes. So all of these things can be updated. You can change book values, increase, decrease on a dollar or percent basis. And this is typically used for IFRS reporting requirements. So if you have to make adjustments to the cost value for financial statement presentation, one of the requirements of IFRS is that assets be valued at net realizable value. So if that's different from the net book value, then you do the adjustment here. So, yeah, go ahead. You have a question?
Oh, no,
it's okay.
I was just saying it was good to see that.
So I'll do an acquisition entry just so you get a feel for the integration. And Roland had mentioned there was a question about the integration to AP. So let's purchase some new equipment. There we go. And you'll see that these transaction screens look just like any other ACPAC transaction screen. There are different types of transactions that we support. A new transaction type is where we want to create an AP invoice because this is a new asset to us. An existing asset means we already own it, so don't create the AP invoice. Or an add-on transaction means that I don't want to create a new asset ID. I want to record the cost from this invoice to an existing asset. So what some people call a betterment or an add-on transaction. This gives you the ability to do the add-on in the acquisition screen rather than creating a new asset and having to merge it together. When we say it's a new transaction type, this is where we utilize the template that we talked about that will populate all of these columns of information automatically based on the template that I'm choosing to use. Okay, so I could do that for different types of assets depending on what I'm currently purchasing. I also have the option to say I want to create an AP invoice, which is what we're going to do here, or if I had an AP invoice already entered, I could do a conversion of that AP invoice for a particular vendor, and then go and search the invoices for that vendor. And you see it's identified this one as a potential fixed asset transaction. So if I say create though, it allows me to choose the vendor from AP. So we're looking at our AP vendor list there. I choose the vendor, and then I'm able to go ahead and start entering the transaction. When I move down to the first entry line, it identifies that I'm using the equipment template, okay? And it's saying that I've got to fill all this information in, which is fine. I pop up this window here, and it defaults in cost center category, location, and group information, and tells me what the next available number is. Notice as well that it's already populated all the other columns of information based on the template. But if I decide that in this case I want it going to a different cost center, let's say it's going over to manufacturing, I change that and it updates the information here as well as in the transaction screen. So it saves you all the extra keystrokes. And when I say create ID, it populates the next available number using the cost center segment of manufacturing, which is what I specify. I'm purchasing equipment, so I put in the description. And then I go and I enter the cost value of the asset. Now, if I am running multi-currency, so you can see I've got a source amount and a functional amount. My exchange rate is 1, so it's not going to be any different. But let's say this is a $5,000 asset, and it automatically calculates what the conversion would be based on your exchange rate. And this is the exchange rate that's populated in common services currency tables. The other thing, and I guess I'll highlight the fact that it picks up the currency and the tax value, so it will calculate the necessary tax based on who the vendor is. One other thing I want to show you quickly is the status. The status defaults to normal, which means it's going to be set up in the asset register and be depreciated starting from this period. So, depending on how you want to process this, I could change the status to a work in progress if I just want to expense this amount to the balance sheet, but not start depreciating it. You also have the zoom key within ACPAC, which is the F9 zoom key. And this shows you the acquisition detail that's going to be populated into your asset register. And so another little trick, before you post the transaction, we give you the ability to modify the start date of depreciation. So even though you've recorded it as a normal asset and not posted it into the WIP account, you can still come in here and say, I really don't want to start depreciating this asset until March. And so you can move ahead the start date for 3 months. And then the system knows that it's not going to start depreciating, and it automatically, based on its useful life, changes the retirement date. So that's just a little trick that you can use to modify when you start depreciating a particular asset. It doesn't have to be the date that you record the transaction. Okay, so then we would save that, and we can add this as a transaction, and it gives us an acquisition control number or document number. But in this case, if we're entering the invoice here, we probably had that invoice number, and we would just enter that and save that. And then that's going to be our document number when we post the transaction up to AP. So we would go ahead and post that transaction now, and you'll see that it generates an AP invoice and updates the GL. So there's no rekeying necessary. We will automatically populate up to the financial module, and it will be identified as an asset management generated invoice batch, $5,000. And it sets it up to that vendor 1400, Coastal Heating of Ottawa. There's my invoice number. There's my transaction amount. And so we've credited this to the vendor, Coastal Heating, and the debit goes to an accounts payable clearing account for $5,000. Now There's drill down supported, so if you want to go from AP back to the source entry in fixed assets, you can see the original source entry here. And the same is true for the general ledger entry that's been recorded. So in GL, it's updated the control account, and again, it's identified as an asset transaction. There's today's date, March 6th. And it sets it up to the control account for new equipment, $1520, $5,000. And in this case, the credit goes to AP clearing. So the clearing accounts have actually cleared out. The entry description flows through. It tells you the source code is asset management acquisition entry. And the drill down, as I mentioned, is supported, so I can see the source entry within fixed assets from the GL. So the net effect of those two entries is to debit the control account for the equipment that was purchased and credit the vendor in AP. So all the transactions flow, and you don't need to rekey anything. So any questions about that before I move along?
No, I think it's...
No? Okay.
Just one question, Rob. Like, one of the things, or the final things we do is we have what is called a continuity schedule, which means, does this system do that?
Absolutely.
Okay,
that's what we call our asset schedule.
Which takes
and
in last...
we can run this multiple ways.
Like take in last year's numbers and all the additions, give a new total cost and whatever the depreciation is, any disposals, giving you net book value at the end?
Absolutely, sir.
Good.
Yeah.
That takes a lot of time.
Oh yeah, I know. This is, yeah, exactly. In fact, interesting you should raise this point, because some people have bought the system just based on this report. Yeah. Because this is what you have to generate for your external account. So,
yeah, correct.
So I've run this for categories, and you can see it's got your opening cost, which should tie into last year's financial statements. And then you've got your additions, any adjustments, disposals, reversals, any merge splits, because we might have combined some assets. You can optionally include a description of the asset and its acquisition date. So that's optional information that you can check or uncheck whether you want it included. And then you get, of course, your closing costs. And then you've got your opening depreciation, year-to-date, any reversals, disposals, merge splits accumulated, and your closing net book value.
Excellent.
So this is run in detail, so you can see it by each individual asset. One of the other things people do is they run this in summary, either by category or possibly account set, depending on how they've structured their GL. And they use this, because this is now summarized, this is what they put in as the note to the financial statements, because it's just the summary information that they want to show. So that is, as you say, that's probably one of the major reports. There is also capitalization analysis. So this is the budget report. If you're interested in seeing a list of the acquisitions that were made against budget, and we'll show you the variance. And all these reports in Crystal, as you're probably aware, can be exported or sent out as PDFs. So once you've printed the Crystal report, you could create a PDF file, you can put it into an XLS format. So using Crystal as the standard report writer gives you lots of flexibility. There's also an asset listing report. So again, you can sort by group, cost center, location, print that off. And so this one is now broken out by location, which could be slightly different. And this gives you the status codes. So you can see if it's a normal status versus something that's disposed, then it would calculate your capital gain or loss on disposal. So it's just a summarized view of what's in the asset register. And it's, sorry, I should have highlighted too, if you are going to go to multi-currency, you can show it in both source and functional currency if you're running multi-currency. So that pretty much covers off all of the issues within the asset accounting module. We looked at the adjustment entries. A couple of other things I'll highlight too. The activity inquiry. This is the ability to view each individual asset and all the transactions that have been recorded against it from the date of acquisition. So this, you can see here there's an acquisition add-on, and by double-clicking it would take me back to the source entry within acquisitions. So it was an add-on entry where I added some costs to this asset. There's depreciation, of course, so you can go back and see the depreciation entry that was recorded. A lease billing, so in this case, I was generating a billing to an AP vendor. So this is what we call a lease in, where I'm leasing the asset from a vendor, and I want to be able to generate an AP invoice to pay that vendor what I owe them for the equipment lease. And then all the different types of transactions are supported. So any transactions that go against these assets, you'll see them as entries within the inquiry. So if you transferred location, this is an adjustment entry, and you'll be able to go back and see the detail on that. So anything that you're doing, it's all recorded in the system, and the history is there for you quickly and easily. And we really didn't show you depreciation because there's not a whole lot to show. One of the real beauties of the system is that once the assets are set up, all you really need to do is come in here and hit the process button, and the system will calculate your depreciation expense and update the net book values. So you can run your asset schedule or your continuity schedule anytime you like, knowing that you've got up-to-date net book values. There's also a projection feature here. So if you're interested in doing some sensitivity analysis or just a straight forecast, you can run your depreciation expense to get an idea of what your expense will be for the rest of this year or even into a future year. As long as that fiscal calendar is open within ACPAC Common Services, you can project out that far. But the sensitivity analysis allows you to actually change your depreciation policy and run your forecast against a different depreciation method, so you can see what impact the change in policy would have on your income statement. And as a control measure, we only allow one depreciation batch to be recorded per fiscal period. So if you do need to add in an asset, then you would simply reverse the depreciation batch that you created and rerun it with the new assets included. And the disposal entries, not much to show here. When you are disposing of an asset, you can choose the asset and then decide, is this a GL transaction or an AR transaction? Do that. So you can create an AR invoice, or you can just write it off to the GL. And there's also a bulk disposal. So if you're disposing of a range of assets, you can do the same thing and write it off to the GL or create an AR invoice batch. And the only other thing here, just so you know, there's a change asset ID function. So if for some reason you want to change your asset numbers in the future, you can change that to whatever you like, and we will move the history from the old asset ID number to the new asset ID number. And then there's the revaluation. This is multi-currency. If you ever went that route, you would be able to adjust the currency amount for the asset for financial statement disclosure. Okay, so any questions about asset accounting?
I have one question. What we do here is when we buy equipment, let's say like trailers, what we have is we set up a salvage value, because usually what we do is we end up selling it after like about maybe 8 to 10 years. So usually 10% becomes like a salvage value, and then what we do is depreciate anything from the original cost less the salvage value and start at that point. Is there a column in here that would show like a salvage value, where you could put in salvage value on your assets before you start depreciating?
And that probably residual values when you're doing the leases, because it's usually some cost at the end of it.
Yes.
Is there?
Yeah, can you see my screen?
Highlighted there. Okay. It's kind of smeared.
No, it's
Because it's highlighted.
Oh, okay, I gotcha, good.
Yeah. So, and you're absolutely right. What we do is, in the formula, you can say you want the original purchase cost less salvage value. And the salvage value, to tweak it, the salvage value of the asset, you can't depreciate it anymore.
Right. Which is good, because doing it manually, what we run into, sometimes we over depreciate assets.
Yeah. Yeah.
Right, Tony?
Yeah.
So this will stop me from doing that.
Yeah, like Rob, tracking multiple pieces of equipment as one unit. That would be my concern. Like, you know, you've got the trailer, then you've got the reefer. So these all very well might be different classes, like depreciation classes, depending how Doug wants to depreciate. But can you link multiple assets to one unit number, and then when you dispose of or whatever, it will recognize all those associated assets in it?
That's a good question.
That's why I want to make sure when something's sold that we're picking up all the pieces and parts.
Sometimes we
Like,
don't.
So they, you know, so you could actually enter. I think you showed that though.
Yeah,
I think you could have a reefer from like, you know, reefer sales, and you can have the asset from, you know, CMIC.
because I think it showed me grouping. You can group
Yeah.
assets for depreciation or for reporting purposes.
Well, I think he hit both. So there's the one
Yeah.
where you can put them together and they're all depreciated over the same rate. And the other one where they all roll up, but you can depreciate the parts of them
Okay.
with different
So we
lives.
have like auto and trailers,
Yeah.
reefers, blah 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 blah.
Yeah.
Oh, that's cool. And then can you associate them, certain ones, to different unit numbers? Like within those different classes, can you say, okay, like, you know, the first trailer on that first, I guess, sub account or
Has this
sub folder
reefer on it.
is unit one, and then the first reefer from that second subcategory is also attached to unit one. Do you know what I mean?
Yeah. Is that your master?
I don't know how to explain this.
So what
Yeah,
is that?
the master asset is allowing you to create a relationship between multiple assets.
Yes.
So you choose one of them as the master asset, and everything else would be considered what we call a component.
So you
And
could
they all have a
actually,
number too.
you
Each
can also-
asset has its own number.
you
And the
can
master
also,
has a number too.
you can also have like serial
Master.
numbers, right? Because let's say you would have a trailer with a number, and then you would have a reefer with a
See, they all
serial
have serial
number.
numbers on them. See, yep, he's got physical status, least and there's a
So
serial
sorry, so
number.
the master number.
Okay.
So then they'd all refer back to the master.
Yes.
So the first one you enter will have the master number, and then anything else associated with
Would
that,
be
you
added.
have to reference back to the master
Yeah.
number. So when you make an entry, you've got a field to reference back to the master number, and that will just become an additional part of that.
Just an add-on.
master.
Well, yeah, I don't know if I'd call it an add-on, but it would roll up. They
Yeah,
roll up. It's
roll
kind of
up.
like drill down,
Roll
drill up.
up's
Yeah.
a better word.
Yeah, when you enter an asset that you want to be a component of a master asset, then you just check this box in the asset register, and it opens up the field for master ID number, and then you choose the asset that you want to link it to.
You have like a container number in there.
Yeah, it will be in there. You can also do that, which is good.
Yeah, it's good. Very good.
Yeah, that way if you sell it.
Well,
You
so
die, then you have to
sometimes they're not,
dispose of the
like,
reefer.
yeah, just in case it gets one gets lost and then
This has been a
overstated your
problem.
book value.
Okay.
Which is great.
Anything else
what-
that you come across daily? Monthly?
Monthly, no, it's, I mean,
think-
I know once everything's in there, depreciation is gonna come.
Yeah.
I like that.
I
is-
think loading the information will probably be.
Yeah, like our biggest challenge right now is keeping all the documentation, you know, in order, and, I mean, that's not gonna be a problem anymore. A lot of problems we have now are gonna be,
Your opening balances are always going to be an issue, right? Because you got to somehow record it in
Yeah,
there and
with
cleanse it before we get
continuity.
it in there. But then once we're in there, it should be.
continuity
because you'll,
schedule and never
You'll always have differences with the auditors, they'll redo depreciation, come up with slightly different number, they'll reclassify some of it, and then all of a sudden you got new balances. But then usually we just put that as audit adjustment and start with their numbers.
So you're also saying too, like, I guess, if you choose to use the tax portion of this,
Capital costs.
so if you can choose to depreciate on a CCA basis.
Yeah,
or
that
book
should be one of the
basis.
methods that you can do is you can I mean, I would think under your depreciation, one of the methods is a declining balance basis that matches a CCA type calculation.
That's correct.
Rather than doing it through tax, you just do it
Because
through
then they don't have
depreciation.
to
Then there should be
journalize the
adjustment.
difference as a
Correct.
future tax asset.
Exactly.
Okay.
Yeah.
And then what if, and so all the other thing, when auditors have adjustments that you ran, usually it's stat adjustments or whatever, you can't just manually journalize, you actually have to go into this module itself and start to
Yeah,
report on the
yeah,
adjustment.
where we in the past have not, like, we just lumped it, but now you can do
The
it.
thing is, I guess I would question why there's differences, only because we should, and hopefully if we get this, our differences should be minimal.
Yeah, no, exactly. And the other thing is, if you journalize outside of this module, when you create crystal reports within the asset management, will it pick up manual journal entries if you hit those fixed asset accounts? Not that you would, I'm just,
Yeah.
if something was ever to get put in as a manual journal entry,
Well,
It wouldn't pick it up.
it wouldn't pick it up.
When
It
you're going to
wouldn't.
GL, it wouldn't pick it
No.
up in the
I'm
subledger.
trying
You
to
need to go
think,
to
I mean,
subledger.
so I think the difference is to what you're saying. So say for example, here's a good example, we purchased something and it got thrown under a repairs and maintenance account
Yeah.
and got expensed that way. Now we go through and look at it and say, no, we should have capitalized that.
And you
So
manually
you're gonna have to do
journalize
a journal entry
Yeah.
to take it out, but then you're gonna have to go into the fixed asset
And put it-
subledger and just put it in. It's not gonna link to
Yeah, you have to
Yeah,
put an
it-
existing
amount, so
unit
Yeah.
and then move it that way. But I was saying if somebody else to manually journalize it, this would, it would not pick it up.